All right, good morning, guys. It is Tuesday, January 17th. It is 6:36 a.m. right before market opens. Back in my bathrobe, actually on time for a change. There wasn't a video yesterday because the market was closed, so I figured I would just wait until today to report on stuff. We have a lot of interesting stories. So we're going to be talking about two opposing things. Some stories are showing that the market is improving, and some stories are showing that the market is actually going to be taking a downturn pretty soon. These stories are interesting because they're even starting to change my own mind on where the market is going. For the longest time, I've been saying I don't necessarily believe the analysts. I think that they're being too hawkish. I think it's become very trendy to be pessimistic about the market, and that I think the market is actually going to do better than they say. But there's a few indicators here that I am very interested in. Really, one indicator I've been kind of beating a dead horse about is gold. Gold is starting to be an indicator that the market is going to take a pretty big downturn. Gold is climbing again. It's down currently, but not down overall. So it's down for the day, but it was up yesterday. It actually touched 1923. That's very high. 1923 is very high, and it's still at 1910 right now as a spot price. That's well above where it was just a few weeks ago. I think this trend is going to continue. I think it's going to hit 2300, and when it does, I think something is going to happen in the market. I'm going to probably do a bigger video on this and flesh this out a little bit more, but every time the gold skyrockets, it signals a market drop or it's a result of a market drop. So the market drops and then gold skyrockets. So I'm thinking that something is going to be happening probably in February, possibly a major correction. If my prediction is right, gold is going to continue to rise until it's past 2,000 an ounce, well into 2,300 is where I think it's going to arrive. I think it's going to arrive at 2,300 an ounce, and then something's going to happen in the market. A major drop. Maybe the hike in interest rates finally causes a downturn in the housing market and investment, but something big is coming in February is what my prediction is, just based off of that single indicator. I know it's probably a strange opinion to have, given that we have all these other indicators, but I feel like it's the only indicator not being talked about. Everything else I feel like the market already is aware of, but I feel like gold is kind of being the dark horse here. The other thing I want to talk about is global growth. So global growth is up. So this is kind of the opposing view. So according to Barclays, it's up 2.2%, and they're expecting better growth in 2023 as both China and Europe start to kind of get better with their situation. China, of course, is leaving lockdowns. Their COVID numbers are high, but at this point, they don't seem to care. They have to reopen, and it looks like reopening is going full steam ahead. Also, Europe is finally adapting to living in an environment where Russia is on its borders, and so that economic growth is actually looking more positive. In fact, the UK GDP is higher than expected. So France's, we talked about this story a few weeks ago, France's inflation numbers are slowing as well. So there's a lot of positive signs that Europe is going to be doing better this year than it was last year, because last year it was at the beginning of the Ukraine war, and now they're coming straight into it. This is just status quo at this point, and they're going to be continuing. The other thing was Goldman Sachs. Goldman is actually down, which isn't surprising. Investment banking is not doing good. BlackRock reported terrible earnings last week. We talked about that. And now Goldman is continuing. So they were expecting revenues of 10.83 billion. They came in at 10.59. They were looking at earnings of $3.32. They reported numbers, of $3.32 a share. The estimate was $548 per share. So Goldman is not doing good. And a lot of those big investment banks aren't doing good. Like I've talked about before, I think this is good for Main Street. I think a lot of this stuff that was happening on Wall Street was choking out Main Street. I think that this means that businesses locally are going to do much stronger. You're not going to have private equity coming in and destroying mom and pop stores. You're not going to have super low interest rates and high cash margin purchases of homes. This is better for the consumer. So I'm looking forward to this. The other thing I want to talk about is China. So China's population has dropped for the first time in history. This is interesting because for those of you that watch Joe Rogan, a few weeks ago he had Peter Zahan. He's a geopolitical analyst. He was talking about how this is China's last decade, that their population collapse is coming. And population collapses are happening, or going to be happening, probably all around the world. This is the kind of thing that Elon Musk has talked about, right? And he gets a lot of flack for it, but I think he's absolutely right. Birth rates have been dropping for a while. In Europe, in Russia, a lot of people are saying that's what's precipitating this war, is that their population is dwindling and they won't have a massive army that they can use in the future. And finally, now we're talking about China. So, China's population declined in 2022. It was the first drop ever seen since the 1960s. Mainland China's population, excluding foreigners, fell by 850,000 people to 1.4 billion. Peter Zahan talked about on Joe Rogan that this is actually over-reported, that it's actually much worse than that, and that their population is going to be pretty much halved in the next 50 years. So this could be the beginning of what we're seeing, is that China's population is dropping drastically. And we will see what this has to do with global economy. It's definitely going to mean that the population of China is going to mean higher labor cost. So for international manufacturing, for exports, this is going to have a huge effect. Now, this is something that's going to be happening probably over the next 10 years. This is the first time that number was reported. It's probably going to be down again next year and the year after that, especially as COVID is still very much in play in China. And COVID attacks an older population. China's largest populations are their older populations, right? Their younger populations not only do not have kids, but there was the one-child policy. So this could be the beginning of a massive decline that we're going to be seeing over the next several years. And what that's going to play into manufacturing is going to be very interesting. Already, China's labor isn't as cheap as it used to be, right? Even ourselves, we know that we compete with overseas manufacturers. We used to compete with China heavily. Now we're competing more with Vietnam, with Mexico, and the Mexico one is even more challenging because it used to be that, well, if they're shipping off to China, it's taking 3 to 4 weeks. Now with Mexico at the border, it's only taking a couple weeks. It's not that much farther to ship to Mexico than it is to Utah. A lot of our accounts are Texas-based or East Coast-based. So when they're shipping to us, they're shipping halfway across the country. What's a couple thousand miles? And you get much lower labor cost. So I think Mexico is going to be a big player in the global market, and I think this could be the signal that China is going to be dropping. So that's a very interesting story. We'll see how that develops. Last story kind of on the books is the chip shortage. So they're saying that the global chip shortage is dropping, that manufacturing has finally caught up. Supply is plentiful. So we'll see what that has to play with the global markets. I know that was a big factor, or a supposed big factor, with car prices. I've talked about this before, that I've not really seen huge drops in car prices from personal anecdotal evidence, but I think that's pretty powerful. When you go car shopping, you're seeing the prices are nowhere near where they were pre-COVID. So we'll see how this plays into effect. Honestly, I don't think it will, but we'll see where the market takes us. That's pretty much it for today. I'll be back tomorrow with a new video, and I want to do a full feature on gold. I'm going to create a full video for you guys on the gold market with full analysis, and we'll talk about that a little bit more in depth. So I hope you guys have a good day. I hope you set amazing goals. I hope you meet those goals, and we will talk again tomorrow. Good luck, guys.